This isn't a typical message from the head of one of the world's most powerful central banks.
There's nothing more important to the economy now than people getting vaccinated.
But Jerome Powell is trying to steer the US out of a very untypical period with a mixture of ultra-low interest rates and feeding $120 billion into the economy every month.
It seems obvious vaccinating as many people as possible in the United States will clearly help the economy recover from the COVID-19 pandemic. But Powell's critics think he should be focusing less on vaccines and more on his primary duties.
One of them is aiming for maximum employment. That's traditionally an unemployment rate of 5% or less. The US enjoyed that for 5 years before unemployment soared to Great Depression era levels in the first wave of the pandemic. It's now down to just over 6%. The other is inflation. The target is around 2%, but it's been well below that for some time.
But there's growing concern that those ultra-low interest rates, those hundreds of billions of dollars being pumped into the economy every month, and the prospect of a third stimulus package in a year will cause the economy to overheat instead of recovering steadily.
Powell told lawmakers on Tuesday he has it all covered.
Prices remain particularly soft. Overall, on a 12-month basis, inflation remains below our 2% longer run objective.
But some economists see signs of inflation in things like producer prices. They surged to their highest level in over 10 years last month, raising fears they'll be passed on to consumers. And while those economists fear a repeat of the hyperinflation of the 1970s, there's an example unfolding right now in Sudan. In just a few years, inflation has rocketed to more than 300% due to crippling foreign debts, compounding an economic crisis. Owen, Fairclough, CGTN, Washington.